Will November ignite the biggest move Bitcoin and Ethereum has ever seen? Are we just days away from crypto's breakout moment that could redefine this entire cycle? This video is your ultimate guide to Kevin O'Leary's latest analysis and why he believes all hell is about to break loose in crypto. Whether you're a Bitcoin holder or an Ethereum investor, the next few weeks may set the stage for the rest of this cycle. The signs are already appearing. Inflation is easing, the Federal Reserve has turned toward rate cuts, and liquidity across global markets is expanding again. Every major crypto bull run in history has started with that exact setup, but this time the stage is even bigger. Kevin O'Leary, the investor once known for doubting Bitcoin, now says crypto is on track to become the 12th sector of the S&P 500. In doing so, it will attract trillions of dollars of investment. With the Genius and Stablecoin Act now in effect, his prediction that these new regulations would open the floodgates to institutional capital is starting to unfold in real time. Sovereign funds, corporate treasuries, and the biggest institutions on Wall Street are finally entering the crypto market. In this video, we're going to break down why Kevin O'Leary believes crypto's exponential moment has arrived, how new policy is setting off a wave of global adoption, and why the coming months could mark the beginning of the most powerful bull run this decade. And before we jump into it, just a quick reminder, only a small percentage of you watching are actually subscribed. If you're getting value from the videos, hit that subscribe button. It's free, it supports the channel, and you can always change your mind later. Now, let's begin with Kevin's latest on Bitcoin.
I do invest in Bitcoin because I'm a believer in crypto and a believer in digital payment systems over time. I have a general rule you should think about. Don't put the farm onto any one stock. In other words, don't bet everything, ever. So my diversification strategy was taught to me by my mother. Never more than 20% in any one sector, including crypto. Never more than 5% in any one stock or bond. Now we have 11 sectors in the S&P, including real estate, which was recently added. It's the most recent. Crypto is not yet a sector, but I believe it'll become the 12th, probably within 5 years, because it's being legitimized through policy.
Kevin O'Leary is known for his precision when it comes to money. He has always lived by one principle: never bet the farm on anything. In every interview, he reminds investors to stay diversified. No more than 20% in any sector, no more than 5% in any one stock or bond. That rule, taught to him by his mother, built the foundation of his entire portfolio. But now, in 2025, Kevin says there is a new category worth adding to that list: crypto. Right now, the S&P 500 has 11 sectors, with real estate being the latest addition. In Kevin's view, crypto will become the 12th official sector of the index, not because of hype or speculation, but because it is being legitimized by policy. Once the government sets clear rules, digital assets will no longer sit outside the system, they will be fully integrated into it. He believes this transformation will happen within 5 years.
When we get policy and the regulator regulates, that's not a negative thing. The spigots of capital are going to flood into this sector like you've never seen. And so for those of us that can invest in it now, you're getting ahead of what's going to be a huge wave of interest when policy occurs. I predict in the next 10 years that crypto, blockchain, Bitcoin, all of this innovation will be the 12th sector of the S&P. Now, why do I say that? Because Bitcoin is not a coin, it's software. Ethereum is software. Avalanche is software. Helium is software. Solana is software. It's all software. And the smartest hands over keyboards today in the world are developing on the chain and bringing innovation to financial services, which in the end is the largest sector on earth. Now, what we need is policy. We need government to catch up with us so that we don't lose leadership in America to this very important 12th sector of the economy. There's no question.
Kevin's entire thesis builds on one simple belief: regulation is not the enemy. It is the final step before exponential growth. During one of his most watched keynote speeches, he explained that the moment policy arrives, the spigots of capital are going to flood into this sector like you've never seen. That statement was not made lightly. He understands how large capital behaves. Pension funds, sovereign wealth funds, and insurance companies are sitting on trillions in assets, but their mandates prevent them from touching anything unregulated. The instant those barriers come down, the inflows will be unlike anything crypto has ever seen. This is what Kevin calls the inflection point. When policy and innovation meet, liquidity follows. He believes that the next 5 to 10 years will see a complete reclassification of digital assets from experimental technology to institutional-grade infrastructure. He also argues that most people misunderstand what crypto really is. It is not coins or collectibles, it is software. Bitcoin, Ethereum, Solana, Avalanche, and Helium are all software systems built by some of the smartest developers in the world. They are programming financial tools that will reshape how value moves. He says the innovation happening here rivals what Silicon Valley achieved during the internet's early years. Financial services remain the largest sector on Earth. Blockchain is now automating large parts of it. Settlement, lending, custody, and asset issuance are being rebuilt from the ground up. Kevin warns that if America fails to provide regulatory clarity soon, it risks losing leadership in what could be the most important economic transformation since the digital revolution. Regulation is no longer being treated as a roadblock, it is being treated as the next logical step. For Kevin, once that step is complete, crypto will not only enter the S&P, but become one of the fastest growing sectors within it.
I spoke to the senator last night. A 2-page bill that would make stablecoins legal. This is a genius piece of legislature. If it's 2 pages, every senator can read it. And it's very simple. What this says is this. Why is this any different than a money market fund? Why can't we have a simple audit every 30 days with the underlying security inside of it, whether it be USDC or any other stable coin? And why can't we limit the duration of the asset to 12 months or less? And then why don't we let the market compete to provide stable coins, which are now way past $100 billion, and allow institutions to put this on their balance sheets? 2-page bill. There's a senator that wants to do business. I, of course, applaud this mandate because my own auditor won't let me and my operating company do anything with stablecoin because there's no regulation on it. So maybe the best way to approach this for all of us that are interested in crypto is to pick one pillar of value. And right now, I would argue that stablecoins are one of the fastest growing asset classes outside of Bitcoin, and help this become policy and law, and watch what happens. And the reason you should care is, if it's backed by the US dollar, it will become the reserve currency of the earth. That's what will happen. And why would we want to give that up to any other country? Why would we ever give that innovation up? So let's regulate this. Let's get behind this bill and make it happen. And I'm not asking the federal government to write one line of code. That's not their job. Let the free market, let the private sector develop these stablecoin products and let them compete, just like Fidelity competes with their money market fund, like Schwab competes. They're regulated and everybody uses them when they have a cash balance on their account. Let's do the same thing here. That way, we have the innovators coding and we have the government regulating. That's a great outcome. It's coming soon.
Kevin shared that he spoke with a senator who drafted a 2-page bill designed to make stablecoins fully legal under US law. He calls it a genius piece of legislation because it is short, simple, and powerful. The bill proposes that every stablecoin must be backed by short-term US treasuries or cash equivalents, audited every 30 days, with maturities limited to 1 year or less. Once those conditions are met, the market would be free to compete. This single policy could unlock a massive new phase of adoption. Without regulation, stablecoins are stuck in limbo. Auditors and CFOs cannot touch them. With regulation, they become one of the most useful tools in modern finance. Companies could hold stablecoins on their balance sheets, move capital across borders, and earn yield, all while staying compliant. That is what Kevin calls a clean outcome, a structure where innovation and oversight exist side by side. He also stresses that this approach serves a national purpose. If the US leads in stablecoin regulation, the digital dollar will become the reserve currency of the internet. That status would extend American financial influence deep into the digital economy. It would prevent other nations from dominating the next era of global settlement. In Kevin's eyes, this is about both innovation and security. It ensures that the US dollar stays central to world trade even as money itself becomes software. And if you want to stay ahead of these signals and know exactly when the market's heating up or when it's giving you those rare buying windows, I break it down every day in the Crypto Nutshell, my free 5-minute daily crypto newsletter. It's built to give you quick, actionable insights so you can make smarter decisions without spending hours buried in charts or headlines. You'll get clear signals on when to buy, when to take profits, and the latest news that could move markets, all delivered straight to your inbox. Just click the first link in the description, enter your email, and you're in. Back in his keynote, Kevin O'Leary said that once governments formalize crypto policy, the floodgates will open and the sector will be revalued from the ground up. In the final stretch of 2025, that prediction is being realized in real time. With the Genius Act, the Stablecoin Act, and a series of digital asset laws now active, crypto has entered the stage Kevin described years ago. It has moved from speculation to legitimacy. The Genius Act established an official framework for tokenized assets and on-chain financial reporting, making it legal for corporations to issue and store digital securities. The Stablecoin Act created the oversight structure that Kevin championed, enforcing 30-day audits and short-duration treasury backing. The two together have changed the landscape overnight. Companies that once viewed digital assets as too risky are now adding them to their portfolios. Even conservative funds are building exposure because the rules are finally clear. Kevin always said that policy equals access and access equals capital. That equation is now visible across the market. Pension funds in Canada, sovereign wealth funds in the Middle East, and insurers in Japan are all allocating to Bitcoin and Ethereum. The total institutional volume on regulated exchanges has tripled since June. The crypto sector now trades in line with traditional equities, not as a disconnected risk asset, but as an integrated part of the broader economy. This is exactly what Kevin meant when he said crypto would become the 12th sector of the S&P. The lines between Wall Street and blockchain are fading, and behind that shift lies the data. The numbers now show how much capital has already started to move. The market structure in 2025 looks eerily similar to what happened before the 2017 blow-off top, only at a much larger scale. Back then, Bitcoin rallied more than 10,000% over 2 years, consolidating 4 times before its final parabolic rise. The same pattern is appearing again. Since the cycle low in late 2022, Bitcoin has moved through 4 major consolidation phases. The last one ended in September, and price has been pressing against the upper boundary since. If history rhymes, the next stage could be the acceleration phase that carries prices into new highs through the end of the year. Institutional data supports that theory. At the start of 2025, corporate treasuries collectively held around 300,000 Bitcoin. Today, that number exceeds 1 million. That is roughly 5% of total supply locked in long-term balance sheets. In less than a year, companies have tripled their holdings. This signals not just confidence, but a strategic shift. Businesses are beginning to treat Bitcoin and Ethereum as treasury assets, not trading instruments. It mirrors what MicroStrategy started years ago, but now scaled across industries. Even more telling is the rise of ETF inflows. Since the approval of spot products, weekly net inflows have remained positive for 22 consecutive weeks. That consistency has not been seen in any other asset class this year. It shows that institutional demand is steady, patient, and anchored by long-term mandates. ETEFF exposure is now being used by pension plans and wealth managers that could never touch raw crypto before. What was once a fringe allocation is now becoming standard. Ethereum is showing a similar pattern. The total value locked across its ecosystem has hit record highs, even as gas fees remain stable. That stability indicates maturity, not decline. It means the network is functioning efficiently despite heavier use. For Kevin, these metrics prove his point. Policy creates confidence, confidence creates participation, and participation drives value. But the story does not end with market data. Macro conditions are also aligning in a way that reinforces his outlook. The US stock market has rallied more than 40% since its April lows, while inflation continues to cool and growth data remains steady. The Federal Reserve has shifted toward rate cuts without any sign of a deep recession. That combination of softer policy and stable demand has always favored risk assets, and Bitcoin has historically been the first to react when liquidity expands. Throughout most of the 2022 to 2025 bull run, Bitcoin and equities moved closely together. Recently, though, a small divergence has formed. Stocks continue to push new highs while Bitcoin has consolidated near the top of its range. This separation rarely lasts long. When confidence is strong and liquidity conditions improve, capital often rotates back into higher beta asset. Crypto still holds that leverage advantage. If risk appetite remains intact, Bitcoin could soon make a sharp catch-up move. Market history supports that potential. Analysis of previous cycles shows that whenever the Fed cuts rates while equities trade within 2% of all-time highs, markets tend to climb another 10 to 15% over the following year. Bitcoin's response in those same environments has typically been far stronger, often multiplying the performance of traditional indexes. With monetary policy turning supportive and new crypto regulations now in effect, the setup for another leg higher is building quickly. Volatility will still appear along the way. Prices can pull back toward 100,000 during corrections, but the structural trend driven by institutional adoption, corporate accumulation, and renewed liquidity remains intact. Every major institution that missed the first half of this cycle is now faced with a choice: enter before the next surge or risk being left behind as the market accelerates into the next phase of expansion. Anyway guys, that's all we have for today. Thanks for watching, and I'll see you all in the next video.